Like the company's title, many people would like to see the share price of Rewalk restart to walk upward. In this video, we're going to talk about Rewalk Robotics Limited, trading under the symbol Rwlk. I would assume that with a trading volume almost 10 times its 90 days average, there gotta be some kind of short squeeze going on, especially in the trend of the moment. However, after some careful examination of how the company is doing, where it's trading and the risks involved, I believe that it should be a company to be considered if it fits your profile. Like, it's not a short squeeze, it's just a decent company to own in your portfolio. Before we start to talk about Rewalk and to determine if it fits your profile, if you like my videos and would like to see more of my analysis, please like, comment, and subscribe to my channel. It'll be greatly appreciated. Rewalk Robotics is a tiny cap company with only around $93 million of market cap. At the same time, it has a very hefty cash stack of $64 million. In terms of its operations, the company is currently incurring an operating loss, but this is secondary for a company of this nature. The main selling point for Rewalk is not its income statement, although it can help if they come up with something amazing in the future. But for now, it's the balance sheet. The company has a lot of cash at hand and slowing down its cash burning rate as well. With the current burning rate, the company has enough money to survive the next 3 to 5 years, which is a layer of guarantee that increases traders' trust and faith in a company. And for other companies, it is also a very attractive potential merger company because when evaluating how much a company is worth, there are two ways to find out the value. The first one is to calculate how much is the company worth with its net assets. The second one is to figure out how much the company is worth based on its operations. Rewalk is currently incurring operating losses, so it would be better to use the balance sheet items. This means that if another big fish wants to target Rewalk, they are basically paying the lowest price possible. And not just the big fish. If you want to buy Rewalk, you are almost paying the bare bones right now. So imagine if you want to buy a car and you're paying at the price of the metals and the plastics. That's basically the current paradigm of Rewalk. In terms of its operations, Rewalk can also afford to invest in its growth without relying too much on external financing thanks to its cash reserves. And by doing so, it can control its financing cost and be less dependent on the fluctuations of interest rates. On the flip side of the coin, like even if they decide to borrow from the market, their current low level of debt means that they have the luxury to borrow a lot of money compared to highly leveraged companies, and can therefore accelerate their growth even more. From the market's behavior, we can see that there is a very high amount of interest to buy Rewalk. Investors need to monitor that amount closely to see if there is any indication that the current demand may begin to shrink, which would be a potential sign to slow down buying or to scoop the bottom. Actually, that really depends on if the stock is currently up or down. If it's currently up, like it's up right now, then a decrease of volume is a signal to either exit the trade or to at least stop buying. If the stock is on a bearish trend, a decrease of volume would signify that it is time to start buying again, because the sell-off is slowing down. Like with all stocks, I would say that buying shares comes with inherent risks of losses due to the price fluctuations. It goes double in this case because Rewalk is still a small cap, and the vast majority of its shareholders are retail shareholders. This means that they would be more like volatile and can sell their shares on a whim, on a rumor, in contrast to the institutional investors who are willing to and are capable of to evaluate the situation in longer time frames. All this is also compounded by the fact that the current frenzy with the stock, because there are so many traders exchanging this company shares on the stock exchange. All those elements considered suggest that it is highly recommended to limit your amount of exposure you're comfortable with. And I would say that this is whatever the amount you're comfortable at losing, to be honest. And to make sure to monitor the market interest closely. The daily volume is a good indication. From a price action perspective, the stock just recently reached new highs. So in terms of like my recommendation of whether you should buy it now, I think that it may be wise to wait a bit before buying the bulk of your allocated amount. The recent price movements suggest that it's going to pull back from new highs, so definitely keep that in mind when deciding when to buy it. Personally, I would recommend an exposure no higher than 0.5% of your portfolio. Please make sure that you don't buy beyond what you're comfortable losing, because it's really not worth it to dump your entire portfolio or to trash your future growth in a stock with so much volatility and such a small market cap. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.